please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Berger Paints is the stock we are discussing now. Revenue growth fairly decent at 17% and EBITDA as well, a fairly decent growth. Margins are marginally higher. We have with us Abhijit Roy, Managing Director and CEO. Good morning, Abhijit. Always a pleasure having you with us. Can we get some more details first with respect to your revenue? What is the volume? What is the realizations increase?
Volume is about 13 to 14%. That's within that range. And decorative business was good. Part of the industrial business started looking up also. So, which is good news, going forward.
Okay. And could you manage any price increases? Was there a realizations growth at all?
In decorative, yes, we had a price increase in the month of March, and then we had another increase in the month of May, 1st May onwards. So those two increases have happened as far as decorative business is concerned. In industrial, we have got partially. It takes a little bit time there in industrial because negotiation happens. Okay. But we are very hopeful that it will be over by June.
So this volume growth of 13 to 14% that you've seen, you think you could replicate it in the first half of FY19?
I can't comment on the first half, but first quarter we should be able to replicate.
Okay, and what about the market share in the domestic decorative business? Where does it stand currently? Have you gained or lost any market share recently?
Well, marginal gain has happened, around 19% is where we stand now.
Okay. Abhijit, good morning. So this gain is at the expense of smaller players or the larger players?
Mostly smaller players. Some one or two large player also, has slipped a little bit. So, from that perspective, yes.
No, the reason I ask is that, are we looking at a bit of a oligopoly kind of market in paints going forward with, two large players?
No, I think, there is competition, there will be, there's still 4 players, in the top 4. And also 1 or 2 additional players, which are there, in certain pockets. So there is competition and intense competition. I don't see that it will, get into a 1 or 2 company race. It will probably remain at, at 4 at least, in the near future.
I'm coming back to the market share issue in a minute. More branded and unbranded, but what about your launch plans? When you last spoke with us, you said you have some launch ideas. What's likely to be rolled out this year?
We have rolled out, 2 products, in the exterior segment called Weathercoat Anti-Dust and Weathercoat Long Life. One for the coastal belt like Kerala, West Bengal, Andhra Pradesh, and the entire coast, that is coastline that is there, Maharashtra also, Gujarat. And the other is for the hinterland, which is anti-dust basically because dust is major problem. So these 2 products, have been rolled out last year, doing quite well. This year we have some plans for wood coatings, some glass coatings which we are getting into. We acquired one company called Sabu Coatings. They had this glass coating and which we would like to introduce this year in India.
Okay, that's interesting. So, in the industrial paints, in the auto paints segment, what kind of growth do you foresee for the company, say over the next couple of years?
See, in automotive, we are largely into the two-wheeler and commercial vehicle segment. We have a joint venture with BNPA for the car segment, which is, gaining traction a little bit because of Nippon's presence and, technology edge. As far as the two-wheeler category is concerned, in last year was quite depressed in the 4th quarter of last year and also the 1st quarter. So we are doing reasonably well in that category this year because of a low base. Protective coatings is looking up a little bit, so much better than what it was last year in the first half.
Okay, so Abhijit, okay, I just wanted to come back to this market share discussion. The big expectation during GST was that you all will take a market share from unbranded players. Is that happening, and is that why your volumes are looking very good, revenues looking very good, and will there be more of it?
No, I don't think anything great has happened on that front.
Okay.
The revenues have been more or less consistent. The volume growths have been around 12-13%. The value growth that you had seen last 2 years, which was slightly depressed at around 8-9%, was because there was price decreases instead of price increase.
Okay.
This time around, there is an inflation of about 2-3%, which is why with a 12-13% volume growth, we get 16-17% value growth. So we have been more or less consistent there.
Just to understand a little more about this glass coatings and wood coatings foray that you've made, do these products give you better margins than, the essential decorative segment?
Yes, they do.
Okay, by how much?
They do, but as of now, it is quite a large differential is there between normal products and wood and glass coatings. But it's a small segment, but growing quite fast.
All right.
Okay, okay, one question. Can you just give us some idea whether rural-urban split and whether rural is doing very well?
Rural is doing better, compared to what it was earlier, and some of the growth boost is coming from the rural market.
Okay.
Urban is stable, more or less.
All right.
No great improvement.
All right, Abhijit, we'll leave it there. Thanks a lot for joining us today. That's Berger Paints, of course, India's second largest paint company. But the market has slipped quite a bit, and just look at the intraday chart of dollar rupee, and that is where, of course, crude is playing an important role. Once again, the market latching onto that as an overriding cue more than anything else. Just look, it's replicating a stock chart at this point in time.
But yesterday the recovery in the rupee also was very sharp.
Very sharp.
So to some giveaway had to happen.
Exactly. And day before was the expiry of contracts. So before that you had seen a lot of move. So for last 2-3 days it's been very volatile. Ashwani Gujral, Mitesh Thakkar are back with us. Rajat Bose is also there. Ashwani, you took the short trade on Bank Nifty last we spoke. Are you still carrying it?
Well, the way it's come off from that 260 points higher, and even if you look at IT, the IT index is hardly up 9-10 points. So my sense is that weakness should accelerate from here, and at some point, Bank Nifty should give up all its gains and maybe go 150, 200 on the downside, because market is just open. And if at the open it's given up so much, generally these days they tend to become trending. In a sideways market, you will have upside days which will close at the highs, and then you'll have downside days which will again close at the lows. So you don't tend to get support once momentum picks up in one direction. Yeah. So having said that, you should be short on Nifty, Bank Nifty, and in terms of stocks, I think ICICI Bank is a sell with a stop of 286, target of 274. SBI is a sell with a stop of 270, target of 255. In Tech Mahindra, you can buy with a stop of 686, target of 710. But I think financials should have a bad day.
Yeah, I think the bond yields are crying out, and that's having a much bigger impact than the positives we got from the NCLT, which are more of a long-term nature and probably can be argued as having been priced in. But yeah, 7.83 on the bond is not good news for financials. We also have Mitesh Thakkar with us. Mitesh, good morning again. What would you be trading now at 10?
Yeah, I think Godrej Consumer is something which clearly catches my eye. A good setup on the upside and breakout happening there. So buy with the stop at 1130 for targets of 1200. And I also like REC. I think trying to reverse from the intraday on the intraday chart. So keep a stop at 117, which is a very tight stop loss, and look for targets of 124 to about 125.
Okay, before I go to Rajat, Ashwini, just wanted your thoughts on how to trade Relcom now, or would you use this opportunity to sort of book out if you've made gains, or do you think there could be a couple of more days on the upside?
See, all this has been going on. I don't think this will really make a long-term difference, particularly if the market starts to head lower. Finally, these guys will also participate on the downside. So, if these gains are sustained for the day, you should be happy. But the way the first bar is looking like, I think the high was 21. Right now, it's already 10% lower. So forget about Relcom, etc. Get short on the banks.
Oh yes, in fact, the Bank Nifty is now at the low point, and look, I mean that was the basic premise this morning as well. After a gap up and after yesterday's recovery, especially considering HDFC Bank's move, perhaps in the morning that might not be the good part to chase. Ashwini, just a word on PFC, that's also sliding quite a bit. In fact, a couple of NBFCs are.
See, everything that is, yield dependent or, PSU financial will fall much harder. And these guys are already distressed and underperformers. So I think all kinds of financials will fall, PSU or not.
Okay. Rajat, good morning to you. We've just been speaking to a couple of Calcutta companies. What are you trading today?
I'm actually trading non-banking financial companies, especially those in the housing finance sector, and a homegrown Bata. Bata is a sell in May futures with in the spot with a stop above 800.10 and targets would be 780 and 776. And two housing finance companies, Indiabulls Housing, I would put a stop loss below 1220 for May futures, and 1253 to about 1257 would be the target. I'm expecting quite a bit of short covering towards the end of the session. And DHFL 633 is my stop loss. I'm trading with a very close stop loss, 645 to 647 intraday target, again May futures.
Okay, all right, gentlemen, thanks a lot for joining us. The market is once again getting very volatile. So the mid caps are now inching further in the red, down almost about 0.5%. But let's get a handle on what's happening in the commodity space this morning. Manisha Gupta is here with us. Manisha, almost back at 78 for crude. We were discussing this earlier, but where does it stand currently?
77 something, as we've been watching it since the morning there. But then this is something we've been saying, that 80 odd you have those short positions being created, and at 75 we have seen accumulation come back in case of the crude oil prices. So this perhaps is a near-term range that you are going to watch in case of crude oil prices. On one side, of course, there are statements from OPEC saying that they are not looking to supply furthermore in the global markets. But on the other side, we also are looking at the US producers' efficiency even at lower prices, and then again the increasing inventories in US itself, and that would continue to weigh onto the prices. So very flat trades is what we are seeing in the Asian markets right now, and that's exactly what you have seen opening in sense of Indian markets. It is going to be about the US weekly inventory data today in the evening that these markets will take fresh cues from. But as the US dollar has paused from the kind of rally that we have seen continuing for a 6th straight week, you have seen that buying come back in case of the precious metal prices. Overnight, it has been good gains. We are back above $1,300 per ounce for the gold global prices, and the Indian markets as well holding above that 31,000 mark there. It is about the US dollar taking a pause, and also the Chinese manufacturing data coming in out at the best in last 8 months is something that has supported many of these metals as well. Copper prices trading quite flat, but that's off its 3-week lows that we saw it trading yesterday. We have seen good buying come back in case of the steel ingredients as well. So whether it's nickel or zinc, there is buying back onto that one as well. Nickel is closing this month up by 10%. Lead is up 12% for this month. All of these metals actually are closing the current month in the positive there. Trading strategies, and we have them from KDR Commodities. They have a buy call continuing in case of the crude oil prices for a 2nd straight day, but a sell in natural gas prices is how they are trading their day to day. For the crude oil prices, 4,660 is their target. For the natural gas prices, on the lower side, they're watching out for levels of 194.5.
Okay, thank you very much for that, Manisha. You hold sway on the equity markets as well. They're all getting a drubbing because of crude and higher bond yields. We'll touch base with you later on in the day. We take a break. We are coming back, and once again, it's corporate earnings analysis time. SAIL, Steel Authority of India, showed good results this quarter. PK Singh, the chairman, is going to be with us in a minute after this break.
Back. Well, we're going to discuss the numbers of SAIL, Steel Authority of India. The stock is at the morning lows despite posting good earnings. It's actually the 2nd consecutive quarter of reporting a net profit after nearly 10 quarters of losses. The one blip, though, remains the higher finance costs that the company has been incurring. PK Singh, the chairman of Steel Authority of India, joins us now to talk about that. Mr. Singh, good morning and thanks for joining us. This time the sales growth was good, 34% in this quarter. I just want to know what the sales volumes were in this quarter, and what are you targeting for FY19? The last time we spoke with you, you said that you'll do approximately 16 million tons for FY19. Would you still hold on to that guidance?
Yeah, good morning. Good morning, everybody. In fact, this is not the last quarter only we have made profit. In fact, in 3rd quarter also, our profits, we have shown profit of a modest profit of 82 crores. And I have told that time only that the 4th quarter results are going to be much, much better. And 4th quarter is nearly 10 times of that, more than that. And despite taking a hit of one-time provisions, our profits are more than nearly 1,200 crores.
Okay. No, I think my colleague was asking you, Mr. Singh.
Yeah.
My colleague's question is...
we had seen the physical parameters, the growth is there, almost 7 to 8% physically we have improved.
Okay.
And the turnover, there is almost a more than 30% improvement in the turnover. And FY19, we have taken a very challenging target, and let me tell you, the growth this year we are going to find has to be tremendous, because all our modernization facilities like blast furnace 8 at Bhilai that has started, that has been commissioned, Rourkela, one blast furnace we have added. This is going to give us nearly more than 3 million tons of added production.
Okay.
And so this, the complete benefit we are going to get in this financial year.
Okay. So what can you tell us?
On the profitability front, EBITDA.
Yeah, Mr. Singh, therefore, can you give us some concrete volume numbers? What is the volume in FY18 that you did? And now with all your blast furnace plans working, what is the expected volume in FY19?
See, the volume that we have planned is nearly 18 million ton for the FY19. But there are some problems on the logistic front. So I do not see any reason why we slip more than 1 million ton. So 17, between 17, 18, we should finish.
And this year, FY18, how much was it?
It was 14 million ton, 14.07.
Fair.
Okay, and what are you targeting in terms of an EBITDA per ton?
Last year also, last year also we had suffered production because of the logistic problems. Okay. And there is a lot of improvement on the logistic front. So that losses that we have suffered last year should not happen this year.
Okay.
Yeah.
So what? My next question to you was about the EBITDA per ton. What do you think would be a reasonable target for FY19?
See, the fourth quarter EBITDA that we have achieved, if you take the purely the operational parameters, it was nearly 8,000 rupees per ton. And already in month of April and May, there is an increase of prices of nearly 2,000 rupees. Our average NSR was 40,000 rupees in month of in the fourth quarter, and in the last 2 months that has already increased. Average increase is 2,000 rupees.
Okay.
So taking that forward, there has to be a EBITDA increase of nearly 2,000 rupees. That means 10,000 rupees. But even if we take 8,000 rupees for the whole year, because you cannot expect the similar prices which we are having right now. So 8,000 is quite reasonable, and on top of that, let me also tell you that our cost of production, because of the manpower cost, there is a tremendous improvement. On the manpower cost, we have reduced our manpower cost by nearly 700 to 800 rupees, which is nearly 10%. So that will be carried forward also. We will see a substantial reduction in the manpower cost also. There is no reason why our EBITDA should not increase by 2,000 rupees more.
Okay, 1 minute.
But even if we take the fourth quarter EBITDA, 8,000 rupees. Yeah.
No, go ahead, sir.
So even if we take the 8,000 rupees EBITDA, I mean more than 12,000 crore.
Okay.
Is the very reasonable target for financial year 18.
Okay, so I wanted to speak about employee. I don't know. I'm reading your employee costs as 8866 versus 8964 for FY17. It doesn't look like 10%. It looked like 1% to me. 8866. In fact, that was going to be my question. You have the highest number of employees, and you have the highest number of employees anyway. What are your employee plans? Any rationalization?
No. The per ton, or I'll tell you the exact numbers. Our employee cost was around 6,500 per ton. That means that for the year 16-17.
Okay.
And the 17-18, the cost has reduced to 5,800 rupees. There is a substantial reduction of 700 rupees, which is 10%.
Okay. Okay. I didn't have your...
And on the absolute terms also, this has reduced.
Yes. No. I didn't know your employee per ton cost.
These figures that we are going to publish.
Okay. I was only looking at your overall employee cost, and that was my question.
Not 1%, it is 10%.
Okay. What is the plan in FY19 in terms of employee costs?
See, our employee cost 2 years back was 22% of the manufacturing cost that we were taking. And we had taken a very ambitious target of reducing it to 15% in 2 years' time. And that we have, I'm happy to declare that we have already done it.
Okay.
In the next 3 to 4 years, this cost has to further come down and we should be somewhere around 10 to 11%.
Okay.
Okay.
I think PSU culture and all that is quite reasonable.
Okay. Just before we let you go then, any distressed assets that SAIL is looking at and anything that we can expect to hear in this calendar year itself?
See, the few products which are high value products for us, like rail production. Last year we had seen a substantial jump, whatever we have supplied to rail, and that was nearly 40%. This year also we have, last year we supplied nearly 9 lakh tons of rails to railways, which fetches us better prices. This year we are quite confident that we'll supply 12 lakh tons of rail to railways.
Okay.
Second, the cold rolling products. There also we should see a substantial jump of nearly 15% production, which is again a high value added product for us.
Okay.
Third is the plate that we produce at Rourkela, and there we have this, especially for this pipe making and all that. This particular plate we have already taken trials, and we are going to have commercial production this year. A substantial growth will happen in that year. So that will add to our kitty.
All right. Okay.
And the fourth most important thing is that, we have already reduced our semis sale, which is typically a low price sale.
Okay.
There also nearly 15% reduction has taken place last year. This year also we are planning similar 10 to 15% reduction in semi sale, which will again increase my NSR.
All right. Out of time, Mr. Singh, we will have to leave it at that. Thank you very much indeed for joining us with details of your FY18 and expectations in FY19. It is earnings season, so we have one company after another. Apollo Hospitals is the next earnings that we are discussing. They've shown good growth in especially the pharmacy business, though of course margins have been a little subdued for the company. In the hospital business, margins have improved by about 200 basis points, subdued in the pharmacy business. Sunita Reddy, Managing Director of Apollo Hospitals, joins us on the phone line. Good morning, Sunita. First, if you could take us through the overall performance this quarter as you see it, what are the highlights?
Overall, our standalone revenue grew by 15% to 8,863 crores, out of which the healthcare services grew by 8% and the standalone pharmacies grew by 20%, actually 25%, but it's adjusted for GST. Our EBITDA grew by 26% to 214 crores. Whereas our total healthcare services EBITDA showed a 24% growth to 174 crores, and our SAP EBITDA grew by 32% to 40 crores.
Okay, so what was the impact of price controls on kneecaps and on stents in this quarter?
This quarter was about 11 crores.
All right, 11 crores. Could you break up the performance of both the matured hospitals and the new hospitals for us, and what is expected as you head into the new year?
Yes, we can. Well, new hospitals grew by about 24% and the mature hospitals grew about 7%. But this is on a larger base, so you must think of 7% on a larger base.
Okay, what were the occupancies, if you can tell us, the average revenue per beds, the average length of the stay in the hospitals compared to what we saw last quarter? I'm just trying to gauge if the trends have improved compared to last few quarters.
So the The operational beds are 7,176. Occupancy is at 65%, and we should average length of stay is at 4.4, and the ARPOB has increased to 3,209.50 from 3,137.
Okay, how much did the recently commissioned Navi Mumbai hospital contribute this quarter, and what is the bottom line contribution now from that project?
So, New Bombay, Navi Mumbai, we've opened 150 beds. Currently, 128, 130 beds are occupied. Last year, it was 98 beds. For the last year, it was 23 crores negative EBITDA. But we're now moving to a positive EBITDA. For the whole year, there was a loss of 35 crores.
All right, finally, then when do you expect the Navi Mumbai property to break even, since as you said, it's still sitting on a loss?
This quarter.
Okay, all right. All the best with that, Sunita. Thanks so much for joining us. That's Apollo Hospitals. It was good, actually. The hospital business saw margin expansion this time around, a decent quarter for them. We'll take a short break, but up next, it's a strong showing by Satin Credit Care. HP Singh, the founder and the managing director of the company, will be on our show.